Good day, everyone, and welcome to today's fundamental and market breakdown. My name is Anthony Phillips Njoku, and we'll be going through the fundamental and technical breakdown for the time period of May 2020, 22nd for 2023 to May 26, 2023. So let me repeat it one more time. It is a time period of 22nd May 2023 to 26th May 2023. Thank you for joining this program. And like you all know, I'm Anthony Phillips Njoko, and if it's your first time watching this video, I'm the founder of Tennis Digital Lane, where you have the opportunity to learn about digital assets and digital trading and how to make money online as a serial entrepreneur. Then you also have the opportunity to have your account managed. We offer account management services whereby we can trade your accounts on the financial markets, make profit, and get this profit split. So we trade for different companies and private investors currently. With that said, today we'll be going over the technical structure of the market, what we expect the market to do within this time interval, and then we'll also go through the fundamentals, which is more macroeconomics and why the market is going to move in this direction. So starting with DXY, as we can see, DXY is on an uptrend, a smooth uptrend over here. Yeah, DXY is on an uptrend. And last week ending, when we got, you can see, it's a very smooth trend. Swing low, swing high, swing low, swing high, swing low, swing high, swing low. So we're expecting another swing high. So what I'm looking at, I have two buyers, but my main directional is sell. The next wave is sell. The next wave, what I mean by a wave, this is a wave. This 1, 2, 3, 4, 4 green candles to the upside is a wave. 1, 2, 3, 4, 5, 6 is a wave. The next wave is to the downside. So because of these trend traders, we have swing low, swing high, swing low, swing high, swing low. It bounced 3 times on this trend line. This is a strong and solid trend line support. So what I expect now, I'm looking for my sell setups. Where I'm looking for my sell setup, you can see a market with fulfilled efficiency here. This is the last green candle before this market dropped, and this is another green candle, but it came and fulfilled this efficiency. There's liquidity line up here. This is a double top. So I expect market to push the upside, come back into an M15 MSB within this green candle, and then we have the massive sell-off. Or it's going to go up, swipe liquidity above of this point, and then the massive sell-off, which is the next wave to the downside. So I'm looking for sell setups. If you're a scalper, intraday trader, I'm also an intraday trader, we can take buy setups as soon as the market as soon as the market opens by Monday. You can be looking for your buy setups when you have a fundamental that is going to lead the market to that direction. Then after that, the next thing you're meant to be looking for what is the next wave, the sell setups. So I'll be mainly focused on placing bigger lot size. If I'm meant to trade the market, if I'm entering buy setups, I'll be placing probably 0.5% or 0.25% of my account. That's what I'll be risking. But when I want to go for a sell setup, and I'm sure that this sell setup is genuine, I'll be going for what 1% or 0.5% of my account. That's what I'll be doing for this week. Then if I'm to place a trade for that sell setup, let me now teach you guys a trick. If I'm to place a trade for that sell setup, after I see a sell setup over here, sorry about that. If I'm to place a sell setup over here, and my stop loss is somewhere around here, and I want to take this trade to this psychological level of 102.500. Then instead of me, if my 1% of my account is equivalent to one standard lot, I'm not going to place trade of one standard lot immediately. What I'll place it is 0.5, 0.5. Because 0.5 plus 0.5 is equal to one standard lot. So as soon as I place this market on a sell here, I want to grab the whole move. As soon as I place this market on a sell here, probably 1:3 of my account, which means that if I'm risking 1% of my account, I'm making 3% of my account. This is the profit level here. When the market gets to this profit level, I will take out 0.5 trade and let the other 0.5 trade run. When the market gets into this place, I'll then take out the second 0.5 trade. You will see that I eventually ended up what? Taking profit of 1:4 or 1:4.5 instead of 1:3. But as soon as market hits this target level, I'll be taking this trade and placing it on what? Break even. If the market creates another swing high and swing low, what do I do? I'll bring my entry close to that place. I'll place it on break even. And if the market creates another swing high and swing low, I bring my entry to that place and do what? Put it on break even. I'm not going to close that trade if until the market what swipes to the upside and hits my stop loss. Then the profits I made from this point down to this point, I'll take it. But I'm not going to make 1:3. I'm going to make 1:3 point something. That's the game and the way to maximize on the market and the major moves in the market, not just taking profits early. Because the game here is to minimize your losses when you're wrong and maximize your profits as big as possible when you're correct. So the next on our list is Euro USD. Euro USD. So for DXY, my major setup is for a sell bias. For Euro USD, this is my favorite pair. This is the pair. Like I milked this pair last week. I milked it last week. Like we took a trade here for a sell, made about 1:3 over here. Then we also took another trade here, but it's on a smaller time frame, 15 minutes time frame, milked the market to this downside. Then on Friday, we took a buy setup, milked the market to the upside. Before the Fed speech, we milked the market to the downside again. So we're putting more attention and focus on what we understand better now, which is Euro USD. So for Euro USD, I see the same direction for the DXY. It is highly correlated. It is highly correlated. Whatever DXY is doing, Euro is doing the opposite. It is highly correlated. Like, let me show you guys what I mean by, yeah. So this is the chart. This is the DXY below, the dollar index below. If you look at these charts, they are highly correlated. They are 5 and 6. Whatever the other person is doing, if DXY is going up, if DXY is going up, if DXY is going up, Euro will be going down. Over here, this is DXY. DXY is going up over here. DXY is going up over here. What do you see Euro doing? Euro at this point is going down. Euro at this point is going down. Euro at this point is going down. If DXY is going up, Euro is going down. So it is inverse, it's highly correlated. So if I say DXY would go up before it goes down, what do you expect for Euro? I expect Euro to go down before it goes up. And the same ideology and methodology I expect DXY to have, which is what? The same ideology and methodology I expect DXY to have, which is what? For either Euro to come back, we have unfulfilled deficiency here. Yes, we have unfulfilled deficiency. See, market came into this H4 validation point. There is a a H4 validation point here, a line. There is unfulfilled efficiency over here. So I expect market to come to this place, fulfill efficiency, and then go up. We have what? We have another H4 validation point here, which is going to be a long trade to the upside for Euro USD. So we're looking for our buy setups at this point. We're looking for our buy setups at this point. But if the buy setup doesn't play out right, if you're looking at our buy setup from below here, you need to swipe liquidity. There's liquidity lying below here. The swipe liquidity. This is 1-day validation point. This low down is 1 day validation. To tell that this is a very strong support level for the Euro USD. A very massive strong support level. We have a H4 validation point. We have a 1-day validation point. And we have also a psychological level. So if the market goes below here, I'm looking for my buy setup close to this psychological level of 1.07500. So as the market starts scalpers, you'll be looking for the sell to the downside. Then for the major move for swing traders is buy setups. Then the next on our list for this week is AUD USD. AUD USD is the next on our list. Fantastic. So AUD USD has a different structure. If you guys were here last week Sunday, we told you that we're expecting AUD to move to the upside. On Monday, that was what AUD did. After that, on Tuesday, AUD started to drop. Wednesday, the same thing, started to drop, continued dropping. Thursday, the dropping. Friday, it came back up. So if you can see here, we have what? A downtrend. A downtrend. So currently, the same structure we see on BTC, that's the same structure I'm seeing on AUD. For AUD and DXY, it is not highly correlated. And the structure you see on AUD, it is complex. The correlation between AUD and DXY is about 65%, but the correlation between Euro USD and DXY is about 98%. So you might see that I have a different structure for AUD USD, and I have a different structure for Euro USD. The correlation is totally different. You can do your own personal findings on that, what correlation is. Then from this point, you see we have a channel to the downside. As soon as the market opens up, we're looking for the sell setups. The same way we're looking for sell setups on Euro USD. We're looking for sell setups on AUD USD. I'm focused on Euro USD throughout this week. Majority of the signals will be Euro USD. If you want to know more about our signals, dive down on the comment section or on the bio below. Just click and have access to our Telegram channel. We're getting the signals free. Then we are heading to psychological level of 0.66. After that, a correction. The market doesn't go in one direction, then drops down into this H. There's a H4 validation point over here. It could break that validation point and head into the psychological level of 0.665. What? Is that correct? It's went to 0.6550. It went to 0.6550. Yeah, exactly. It went to 0.6550. Yeah, so that's it for our Euro USD. It's a psychological level. Then GP USD, you see we have a downtrend channel as well. And for GP USD, you can see that the market is currently inside what? A validation point. You see H4 validation points over here. Inside the validation point. This is the high, this is the low. It's inside there. So as soon as the market opens up, we're looking for you to go and sweep, have a return to origin, and then start dropping. It will break below over here and head into this watch. We have a H4 validation point from this candle over here, the last red candle over here. Okay, it's fulfilled efficiency. So this is exactly the last red candle. But we'll be taking this one because it is close to a psychological level. We're taking this low because it's close to a psychological level. So that's what I expect for DXY to drop here, break this GPUSD, break this bottom, head into psychological level before we have any reversal or correction. And then you can drop below to the 1.23 psychological level. Then the next on the list is USD JPY. USD JPY. USD JPY. So for USD JPY, man, I monitored this chart all throughout last week, and I thought that it gave me my setup here. I called out this trade. This was a H4 validation point, the last green candle. If you can see here, and it was at a psychological level. It gave us a M50 market structure break, came back to origin. USD JPY sell, no. Instead, dollar was more strong. It pushed the USD JPY to the upside. Then coming into Friday, I removed my focus from USD JPY, started to correct to the downside, and hit this psychological level, and it's going up. So from here now, I'm expecting USD JPY to move to this upside. There is the H4 validation point to the upper side. When you guess it, this is when I'll start looking for myself setups to the downside for USD JPY into the psychological level of 136.50. Which is going to be about 50% correction of this. Well, we're looking for my major target is going to be 50% of this wave based on the Fibonacci. Let's check it out. So we need the psychological level to monitor. Oh, sorry, 50% of the overall wave. Yeah, 50% of the overall wave. So that's why it is, you see. 50% of our so I expect the wave to end here. So that's why I think that the psychological level I'm looking out for is 136.50. That's psychological level I'm looking out for. But currently, it is not at that point at all. It's not at that point at all. So with that said, that's for USD JPY. We're looking for the sell setups, but before the sell setups, the buy setups are going to set in first for USD JPY. Then for gold, gold fell hard last week. You guys were on my session for last week. I know Frank was there. It fell from as soon as Monday, just retraced the upside into this validation point here. And started falling Tuesday, Wednesday, Thursday. Then a little correction. So for gold, we're still expecting market to do push up, then push down for gold. So you have to trace which there's an unfulfilled deficiency over here. There's an unfulfilled deficiency over here. So you need to monitor the chart. That's why I placed that there's an unfulfilled deficiency. So when the market gets to that point, we're looking for our sell setups for gold, and we're dropping it to the to break this bottom. We break this bottom and head lower. We break the bottom and head lower. That's it for gold. So the next is US oil. US oil. US oil. Our bias for US oil last week was extremely accurate and correct. Extremely accurate and correct. Our bias for last week was that US oil was at this point. That was on Sunday. Told you guys from this point, US oil will start moving up into this H4 validation point. And when it gets into the H4 validation point, this is when we got into the H4 validation point on Wednesday. On Thursday, it started dropping. On Friday, those that missed the entry, it came here, did a little stop hunt, and continued the drop to the downside. So currently on US oil, there is liquidity lying here. There is as in a lot of liquidity lying here and liquidity lying below here and below here. So I expect US oil to come down, sweep this liquidity. There's liquidity below here. Buy liquidity below here. So it's come here, sweep that liquidity, come back into the H4 validation point. There's a H4 validation point and this last red candle, which has got deficiency. And for me, we start seeing US oil to move more to the upside into this validation point. That is where that arrow is pointing, which is around the 50 to 75.60 price for US oil. That's it. That's what I view right now for the US oil. So the last on our list is Bitcoin. The same bias we have for last week, that's the same bias we are running on The market is about 90% waiting, sorry, 80% waiting, 10% buying, 10% selling. So currently, I told you guys last week that we want Bitcoin to come into the $25,000 mark, which is a psychological level. High chances it will just wick there like this and come back and bounce currently on the 25,500 psychological level before we see more push to the upside. But since that announcement on Sunday last week, the market has just been ranging between the 27,500 and the 26,500 mark, and just been ranging indecision. But we all know that, yeah, we're expecting to come down into this 25,000 mark with high volatility, swipe there and then bounce back to 25,000. Then from there, we can be expecting our buys to the upside to about, there is a each position point lying at the price of $25,000. Sorry, $35,000 for BTC. There is a very strong each position points lying there. So that's it for the technical structures. Let's look at the fundamentals for the week. Fundamentals when we expect high volatility to be in the market, because volatility works together with liquidity. Liquidity has to do with the amount of participants in the market, and mainly those who have high participants in the market is the London and New York session. And when the London and New York session overlaps, that's when we have massive volatility in the market. Sorry, liquidity in the market. So we want to know if these participants are in the market, when do we expect what? If these participants in the market, when do we expect volatility? That is what we're trying to figure out right now with the help of the news. So no much news on Monday, which is tomorrow, but we have high impact news on Tuesday for the AUD. This news has potential. This is by 12 o'clock a.m. for the AUD. This is the Jodo Bank Manufacturing, AUD Jodo Bank Service PMI. This is Euro S&P Global Service PMI. This is S&P Global Manufacturing PMI. This is S&P Global Service PMI. This is S&P Global Manufacturing PMI. So that is it for London session. We have Euro news. This has high chances of pushing Euro to the upside. Probably Monday we will see Euro go to the downside. The continuation move of Friday, that's what we'll see play out on Monday. The continuation move of the sell-off on Friday, that's what we'll see on Monday. But after that, on Tuesday, we see that this news, S&P Global Service PMI has high volatility to push the market to the upside. It has high volatility to push the market to the upside. That's it for Euro. That's it for Euro. 8:30 a.m. Then we have another one by 9 o'clock. For Euro, then we have GBP news by 9:30. So we'll have to start trading. We have to start trading the market exactly by 7:30 or 8 o'clock. So you can catch the news by 8:30. That same day, we have news on dollar as well. London, New York session. This PMI, S&P Global Service PMI. Then on Wednesday, we have GBP news by 7 o'clock, this London session. And we have IFO, business climate for Euro as well. FOMC minutes. Wow, this is a very, very high impact news for dollar on Wednesday too. So Wednesday we'll be trading live. I'll be streaming on Instagram. If you want to join us on Instagram, join our Instagram channel. The link to our social media handle is going to be on the bio below. Join our Instagram. I'll be streaming live. I'll be recording myself trade live on Instagram on Wednesday, because we used to trade on Telegram before, but the trading system on Telegram is a little bit glitchy now, so we're shifting it over to Instagram on our 10x Digital Lane official website. That's what we'll be trading. We'll not be trading on a personal account. We're trading on 10x Digital Lane official websites. We'll be seeing us analyze the market, study the market, and placing trades on the market. Then on Thursday, we have London session news on Euro as well, and jobless claims on New York session. A lot of news on New York session every single day. Wow. Then on Friday, we have massive goods trade balance for dollar by 130, which is the time when we have high volatility and high liquidity, overlapping markets. London and New York session is open by 1:30 West African time. This is when we have high volatility and high liquidity. That's when we see massive movements in the market, and that's the best trading opportunities. Thank you so much for watching to this point. Please don't miss out. If you want to learn more, you can dive down to our website, www.energystylelane.com. Pick a package for yourself, learn how to trade the digital market, learn how to build a digital portfolio, learn how to grow your digital portfolio, because we have good sponsors, we have good companies that we work with. You can see them like the likes of CoinMarketCap, Cointelegraph, Trust Wallet, and so on and so forth. We work with Hot Forex, we work with different prop firms and institutions. Also, we have a very good team behind us who support us in our tax, and we have a very, very affordable price, which has high chances of being increased by the 6 months of this year. We are making plans to increase this price by 6 months of this year. So if you're grabbing this package now, this is going to be about 1,000% investment in yourself, because the information you're getting here is top notch, straight to the point, and the guidance you're getting is what? Professional guidance to build your mindset, your skill set, and what? Your ability to earn income from the financial market. It is not a get-rich-quick scheme, but it's a get-rich steady, get-rich, grow your financial portfolio. Thank you so much. I really appreciate you guys being on this call. Do have a wonderful and profitable trading week.